What's going on, guys? Welcome in, welcome in. Get started here just shortly. In the meantime, kind of watching this volatility with Disney here. Still relatively flat though. It's only up what, a few cents here right now, barely a percent. What's going on, Thomas? What a day, I gotta say. Today was definitely one of those wrecking kind of days. Not entirely out of what my equation was looking at yesterday's price action, what I was kind of expecting. But I was thinking that market was going to take this a little bit better. That the number would probably be closer to that 8.1 mark. In terms of the CPI data that we had this morning, came in roughly 8.3 if I'm not mistaken. So just under basically what was our last CPI data, which was about 8.6. This one came in at 8.3, and it was above the estimates of the 8.1 that was expected this time around. And so, also, just a quick thing, if anyone can just give me a quick mic check, make sure you can hear me, that there's no issues. Just drop me a comment real quick. Let me know my mic is good. What's going on, El Lobo? Can I pull up Disney? I actually just dropped it on the screen right now. So I was about to take a look at that before I take a look at Spy. What's going on, Ricardo? But again, just give me a quick mic check. Anyone, someone. Just make sure you guys can hear me. That I don't have any issues. I know that there seems to be an issue with maybe listening to me on mobile. So I'm trying to play around with the settings here, see if there's something I can do. So maybe by tomorrow, if not what I did today, by tomorrow, then I should be able to get that hopefully corrected for those of you on mobile. All right. Appreciate that, Paris. So, like I was pretty much starting it out, CPI data, it came in better than the last time around of the 8.6 estimate that we had last time. However, this time it was greater than the 8.1 that was expected, and that's basically why we saw the downfall that we had. Appreciate you guys. Randy, what's going on? 700. I'll get to Tesla. Don't worry. I'll get there in a second. So, but today was a little bit more of that. Literally felt like a waterfall. After we had such a nice spike this morning, we had the little drop off of the CPI data. We had the beautiful V-shaped recovery. It felt like, and then the next thing we know, we just started to literally just make lower lows, and then we had that nosedive that created what a beautiful trend day that ended up being after about 2 hours in the market open. And that's what it was. What a market crash. And as you saw from the headline that I pretty much documented there, long term charts, that's really what you should be looking at right now. I think I've said that the past few days, is that you're really looking at the long term charts rather than pretty much looking to pretty much short the bounces. And that's why I've said in bear markets, obviously you have bear market rallies, but most of the time you end up shorting whatever bounce there is in the market. Whatever push you have in the market is typically getting shorted in a bear market. And that's exactly what you saw typically happen this morning. We got the nice V-shaped recovery, and what did that do? That gave the opportunity for retail traders, for market makers, for big hedge funds to really just load up right on that pump and take us right back down. That's exactly what happened. Today, you saw charts really broke down that we have not really seen pretty much break their long-term trend lines. And I want to say you could start that off by literally just looking at Apple. Apple with an 8-point drop today. When was the last time that we saw Apple have an 8-point drop? That stood out to me, and I am watching Disney, by the way. So if you see it on the screen, I see it's up about $3 right now. So I am watching it. But again, just pretty much recapping what I saw today. What stood out to me, it was watching Apple. There was a really large put order that came through Apple. I'll get to that put order once I get to Apple's chart in a second here. That was something that really stood out to me. I was watching also Tesla this morning. And then I also pointed out this afternoon, and Avery even pretty much commented about it, was I was looking at how much pretty much traders were loading up on ARC puts for the past, not just the past week, but the past few weeks. They were loading up on ARC puts. That was down roughly about 10% today on ARC. And that, of course, if ARC is going down, then we can pretty much conclude that all the names that ARC is pretty much holding, a lot of those growth names, and the biggest star of it all is Tesla. And what did Tesla do? We saw it down about 60 something dollars today. So that kind of gave me a little bit of an indication where Tesla was likely headed to once we saw the market start to roll over and we saw ARC going with it. And that gave me my indication of how much Tesla was going to go with it. Sneak peek also for those of you that are not aware, we do have Tesla that's currently invading. That's one of the cloud alerts that It's in beta right now just to make sure that the win rate is there. What was created is pretty much stabilized, that it's in the right parameters right now. So it isn't testing, but that did fire twice today and actually paid out twice today as well. So that was a solid thing that we ended up creating. It'll probably be, maybe I want to say by the end of the week, if not by the beginning of next week. Then Tesla Cloud Alert should be live, and that's roughly about an estimated $12 move in which we should get that going by the end of the week. If not, the latest I think should be the beginning of next week, and that looks like it's gonna go live here very shortly. So that's something to pretty much look into. If you guys didn't see my comment, also I did pull out Shop Cloud Alert. Pretty much just for maintenance, making sure that all the criteria is still met. I haven't seen it fire in the past few days here, even though I know Shop continues to roll over. So I'm gonna have that one pretty much monitored, and I'm gonna look to see if I do any kind of edit to it in terms of the parameters and get that. I'll go back into testing and then back into live for you guys as well. On the other side note, I do have Disney that actually went into testing today. We'll see how the Disney algo pretty much performs in beta. And then the other one that's still currently in there is also Facebook. So that's pretty much two tickers that you can look forward to that should be hitting live potentially, I want to say sometime next week, but don't quote me on that. So we'll see how they perform in beta, and that'll hopefully be available for all of you in the next few days here, right? But getting into it, looking at Disney, I want to say this is a little bit more of a surprise to me, because I did not expect this kind of price action out of Disney here. I'm gonna look real quick to see. I'm assuming that they beat that, maybe their subscriber growth actually was better than expected. Just looking at it real quick. They posted 7.9 million subscribers versus the 4.5 million that was expected. So they ended up beating on the total number of subscribers. So I see why they ended up beating. I would assume that the reason why it's not up more than it actually is right now is because of likely of guidance, in which we saw what the guidance was with Netflix, despite the fact that that was actually losing subscribers, and they forecasted to lose 2 million. I think that's what the market's waiting on. We really want to see what Disney's going to guide, and then that'll likely be the bigger telling story, and then also how the perks are performing and what's on the back end of that. So, as we see, it's slowly creeping up right now. How high do I potentially look at Disney going now? That's the bigger question. I'm going to look up for the weekly here to see where we can continue to get a little bit more of a push out of this. And the spot that pretty much stands out to me right now is right around this 113 spot. 113 to 113 half is where I'm looking at. If I draw the line so you kind of get an idea of where that sits on the chart. And I'll change the color real quick. Let's see. I'll drop it in yellow. So you can see that pretty much where we ended up hitting resistance, consolidating for the greater part of basically, what is this, from May of 2015 up until March 2019. That kind of acted as a nice little resistance that we've had from all those times, for all those years, basically off of Disney. And that's the spot that I would expect to hit here on any kind of continuation this evening, or whether it be on the back end of analyst upgrades come tomorrow morning. And so 113 to 113 half. However, I do not expect that to necessarily hold here with the current market conditions, the volatility we have going on. I think best case scenario is that you likely smack that by morning, but that's likely going to end up being a fade. And if my memory pretty much recalls, I think Disney's been one of those names that every time it's reported and the times that it has popped off of earnings, it's always been a fader. I've never remembered ever playing continuation or any momentum on the back end of earnings for Disney, except for the time that it was over the $200 mark, or it was pretty much breaching that $200 mark where it was close enough to the highs. I think that was the only time that I ended up playing momentum or any continuation off of Disney on the back end of earnings. So be cautious about that if you're trying to pretty much play the upside on that one. But 113 to 113 half, that's the spot that I'm watching. And that basically dates back to that resistance from majority of 2015 up until 2019. And so that's what I'm going to be watching for, is that 113 and 113 half. And believe it or not, I may end up potentially even shorting it at that spot. All right. Just waiting until the housing market crashes too. Mr. Seriously, you are pretty much spot on. I'm glad that you're pretty much on top of that. That is something that you do have to pay attention to as well, is the housing market. Commodity prices just continue to skyrocket. The housing market is waiting for the bubble to pretty much just drop the ball there. The other thing that I'm watching is I'm still looking at the yields right now. The bond yields are just continuing to pretty much stay elevated right now. I would expect that they're going to go up here by the end of the week. So that's something I'm going to continue to watch. You want to continue to watch the dollar. I mentioned those two things that you really wanted to pay attention to this morning, and those were the two things that I was really watching. So the bond yields, the dollar, the commodities, and the housing market. Yes, those are four things that you always want to be pretty much paying attention to right now, especially on this downfall of this market as we escalate to the downside here. All right. But hopefully you pretty much got the picture. Looking at 113, the 113.5 on Disney. My only fear here is that obviously we've seen a lot of these trends pretty much break. A lot of the formations testing where they're wiping out the lows that they've had, whether it be COVID-19 lows or even lower than that for that matter. I'm pretty much watching. You may end up potentially having a downside towards 79. That was literally the level that I was particularly watching, and you're probably gonna look at the price right now and say, "Wow, that's a really wide distance to the downside here, down to 79." But if I'm looking at the COVID low, and I'm also looking at a low from August of 2014, that's particularly the level that kind of stands out to me. If market downside continues to pretty much escalate here, and we fade off of that 113, we could fade pretty quickly. Then that might end up being the level that I particularly watch. And so I won't say that until we end up dropping below 100 though. So I think we can hold $100. That was pretty much a little bit of a support resistance level that we had between those 2 years that I gave you, between 2019, dating back to 2015. That $100 mark was definitely a psych level that it pretty much held quite a bit. So we're kind of in the range here between $100 up to 113.5 is that range I'm watching. But if we break to the downside below 100, then I'm watching 79, which puts us right down towards that COVID low is what I'll be looking at. All right. So that's one that stood out to me. The other one I wanted to get to was looking at Apple. Apple was one that today really was just what a downside off of this. What stood out to me though more so about this is that I saw a buyer that pretty much stepped in. They dropped 4.5 million on Apple puts for July. But what was the most interesting part about that is the strike that they hit. They dropped with the $4.5 million. They dropped it on 125 puts. And so when I first saw it, I'm like, that was a little bit of a head scratcher to me. Why did you drop that on 125 puts? But then when I look back at the chart, if I pretty much look at the fact of where we broke out for most of the time, we haven't even got to basically what our COVID lows were. We're pretty much very far off from that. But what stood out to me is the little ascending triangle action that we had going on between August 2020 up until um, middle of 2021. We had a nice ascending triangle action, and that 125 spot, if that actually does go into the money or at the money, basically, that would be the support of this ascending triangle that we broke out of, dating back towards basically I want to say June of 2021 is that ideal spot, in which we bounced off of the support of this ascending triangle and we broke out. So this is something I'm going to continue to watch. I think this one really caught my attention here today. I'm going to be looking at this one below the 143 spot. That's where it's going to get really interesting to me, and we could see this really start to continue to accelerate to the downside. So right now, likely tomorrow, I think we get a little bit more. We probably get a dead cat, I would hope, tomorrow morning. Gives another opportunity for shorts to step in, and then we likely see this in continuation down towards 143. Below the 143, I think that's when we're going to see this really start to accelerate. And that'll likely kick SPY to the downside in pretty much higher gear. All right. So, but tomorrow I would expect 143 to pretty much smack. We get a dead count likely, and then 143 I think is on deck. 143 low, which is roughly 143.25. All right. So that's one that caught my attention. That was a heavy put buyer that really caught my attention off of that one. The other name that I'm pretty much watching is also Tesla here. You have a nice little descending, broadening wedge action going on here. If I pretty much just draw that out, just roughly a little descending, broadening wedge type action that you see right now. Now, where do I have this pretty much heading towards? I think ultimately where we're looking at when it's all likely said and done for right now to the market volatility, we're likely going down towards about 444, 544, 544, 544, 545 is the level that we're watching in terms of the downside here, in which this basically was your support that you had dating back towards November of 2020 up until May of 2021 before we had that full on breakout that we made. So I'm going to be looking at that 544, 545 is where I'm looking at in terms of downside, which pretty much coincides with where the downside is that I'm looking at Apple. Pretty much a very wide gap. We had a period in time where Tesla and Apple were kind of leading. With the little rally that we had, if we kind of remember about a month or two ago, we had a nice little bear market rally, you want to say. Tesla and Apple were the ones leading it. Now we saw Apple break down today. I'm waiting for this Tesla breakdown to be a lot more than what we see right now from today. And once we break this under 700, I think that's where we're gonna start to really accelerate. And I would not be surprised to see that we end up having about $100 day down. And that's what I pretty much want to be a part of and take advantage of to the downside. All right. So we crack under that $700 level. I think we're really gonna start to accelerate. You have a little bit of a support right around 620. Above that, the next support level I'm likely looking at is roughly right around 687. So 687. Below that, 627, 626, and then I think that'll likely be continuation to your downfall, in which we get that target I'm watching, 544, 545. All right. But this is definitely one in conjunction with how Apple has started to now break down off of the larger time frames. I think Tesla's gonna follow suit, and this is the next one to really take a downfall, in which is literally gonna lead us to more blood in the street. All right, so that's another one that caught my attention. By the way, if there's any tickers that you guys want me to take a peep at, just let me know. EPS 1.08 versus 1.19 for the forecast, and still rallied. El Lobo, I think the biggest reason why that was, and that's why I was like, I kind of want to wait for the forecast as well on Disney. If I kind of look back at it, it's only up $3 though. I mean, that to me, that's still flat. I think if you actually had calls on that, it's likely still I'd be crushed right now. But if we actually saw on the back end of Netflix, I think the street was pretty much going into Disney earnings with low expectations, and that's why we saw it just pretty much pump like that. Is that on the back end of Netflix having disappointing numbers, Roku having disappointing numbers, I think the market had under expectations, or not under, but low expectations for it, and that's why the fact that they ended up increasing its subscribers on the back end of all the disappointing earnings from Netflix and Roku. That's why we saw it pop primarily. All right. And so I'll keep to see an eye on it. But again, 113, 113 half. I think maybe buy some analyst upgrades. Maybe some dark pool buys coming in this afternoon. Maybe we see a nice little pop by the morning here. All right. Let's see the other ones. Spot Paris. I'll drop SPY real quick. I'll take a look at NVTA. I have not looked at that ticker. The crazy part about my SPY chart is that everything that I had lined up here actually got deleted, and I did not even realize that it actually got deleted until a little while ago. So, but pretty much outlined the key levels that I'm watching here short term right now. Obviously, we see where we're sitting at right now at that 392 spot. A little bit of a bounce after hours here, probably on the back end of maybe some Disney and some other earnings. But what I'm watching for is potentially this dead cat. If we get a dead cat up towards 390, 396 is what I'm watching at for a dead cat potentially. If we get any further upside, then the level I'm watching above that is 398 low. Um, for the downside with this case is that obviously we have 390 is going to be another big psych level, but below 390, and which is why I don't have 390 highlighted because I just know that's pretty much a big psych level. But once we crack under the 390, the levels I'm watching is 387 low, and below that I have us coming down towards 385. So I think that's likely what we're looking at pretty much tomorrow. Maybe we likely end up getting the bounce up towards that 396, and I think we're gonna end up being in a little bit of continuation of free fall mode down towards 385, and that's what I'm pretty much expecting towards tomorrow on SPY. Again, in which case, if we end up getting more downside tomorrow, that's why I was kind of saying that I know that Apple's already broken down. We already seen an onslaught of other tech names that have already broken down and just continue to escalate to the downside. Amazon, Facebook, Netflix, they've all just been beaten up. The name that has not been beaten up as much as it should have yet is Tesla. So that's why I was kind of pointing fingers at Tesla right now. And that's what I'm gonna look at on the downside here. Once we end up hopefully getting that dead cap in the morning, we'll watch to see that 387, then 385, and then likely Tesla and Apple will be my main focus in continuation to the downside here tomorrow. All right, but that's pretty much what my expectation is going to tomorrow with SPY. Let me take a look at NVTA. I have not looked at this ticker, and this is a penny stock. Wow, this thing has died. What? This was a $62 stock, and it's now at $3. Damn, that sounds like a Fubo type of stock. It literally reminds me of Fubo. Um, what can I say about this right now? Because right now I see that you're pretty much approaching earnings. You're approaching earnings in August. Still about 2 months away. But if I'm really, there's not much TA that I can do on this, to be honest with you. And those of you that pretty much have been on my live pretty much continuously, you know, there's pretty much one thing that I usually look at is that is there a defined downtrend, and have we pretty much hit the resistance? If I'm looking at this, this is a very well defined downtrend, and there's nothing here that tells me that I pretty much want to be in this trade right now, to be honest with you. So if you're pretty much buying this, there has to be some kind of catalyst that you're looking at in terms of buying NVTA. It's either a catalyst or there's maybe some kind of news that you're pretty much expecting, that's going to end up taking this to newer heights. But as of right now, this is a straight up waterfall. There's no key support level to the downside once we get into the penny zone area. And then pretty much the fact that I would not be a buyer of this until we end up breaking back over $7 half. If we break 7.5, then we will talk, and then we could potentially look at maybe this gap fill here at the top at $23. Of course, you would still have some resistance. $15 is another resistance. Below that, you're pretty much looking roughly around 12.20 is where another resistance level is. But again, this is a free fall right now. There's nothing here that I really want to look at. Nothing that I want to buy off of this. He's Mr. Seriously, I'll be honest with you. Even though that he's probably back holding NVTA, you would be surprised how many people, and I say this very nicely, you'd be surprised how many people are actually back holding a lot of these growth names, even tech names. Because sad reality is right now, I think, and this is probably honest truth, if anything that you bought and you're still holding within the past, I want to say year to two, 1 to 2 years here, you can pretty much imagine that it's pretty much just exactly lower. Everything's in defined downtrends. Everything's pretty much retracing back towards 2020 lows, of basically your COVID lows, and some have even wiped out quote COVID lows. Pretty much looking at maybe a name like Netflix, it's wiped out as COVID low. So it's just a sad reality of a lot of these names. But until they end up breaking a defined downtrend, one, I'm not a buyer unless I pretty much believe in the product that they provide, or I believe that there's a catalyst that could potentially end up taking this to newer heights. Then I'm not particularly a buyer of it. All right. So exactly, Mr. Lee. I mean, that's why I say if you bought anything within the past year or two, I want to say from a few months after the COVID rally, then you're likely still down on that. I mean, people's retirement accounts are getting destroyed right now. And I mean, sadly, there's just like, what am I going to do with that? Do I cut the loss, or do I pretty much look at it years from now that it's going to go back to that level? And that's just the sad reality. Like, I know a lot of people that ended up buying Baba over $200. I mean, that's just sad reality, right? There's people that are held Netflix when it was $700 that ended up tapping 700 off of earnings, maybe thinking that it would go into that $1,000 range of where Tesla is, and sadly, now it's just 100 something dollars. You lost literally about $600 off of Netflix. Sad reality right now. All right. Let's see if I look at the next one, DCA. Arc is at COVID crash levels. I'm sadly, I actually think it's about to take out even some more lows on Arc, and that's why, as I was pointing fingers towards Tesla downside, Arc is going to be a beneficiary of that. In which, if Tesla's going to go lower, Arc is likely going to end up going lower as well. All right. DCA, this is utilities. I like the sector in general. So that's pretty much a positive off of DCA. So I can understand why you're looking at a name like this. Looking at the fact that it looks like it has a nice little support level. This kind of looks like a nice little ascending, broadening wedge kind of action here going on. So I do like this name. What I would say though, and this is would be my preference, is that I would wait for this to get down to the support level, because what typically ends up happening with the ascending, broadening wedge actions is that they typically end up breaking to the south. Not that I would want this to, but this is typically a bearish pattern in which you end up creeping down towards support, and this typically ends up breaking down. So that's kind of my concern about the formation that's kind of forming here on the weekly. That's really my major concern. But what I would say is that if you're really looking to pretty much get into this to kind of trade this, I think you wait for this to get down towards that 13 high, $14 mark, and then we wait to see if it holds the support. If it can't hold the support, then more than likely you're going to end up breaking that support level, and it's going to come to the low end of where its IPO was, sitting roughly at this 1130 mark is what you're looking at. All right. So that's basically what I would say with DCA. I mean, it's just unfortunate. It's an ascending, broadening wedge action. If you kind of look at it, those are typically bearish patterns. So wait for the $14, maybe a high $13 range, to tap this weekly trendline support, and then we see if it holds there. Otherwise, if it can't, it's coming down to the IPO low, which is right around that $11 low mark. All right. But I understand pretty much utilities are definitely the sector to want to be in. I understand that. So I like the sector as a whole. It's just the specific ticker, the specific pattern that you're looking at. Unfortunately, it's usually typically bearish. All right. And that's pretty much what I would say best case. All right. Sid's your dollar cost average method. If you thought I'm asking for well, pretty much what I would say is in terms of that. Let me take a look real quick. Let me see. Let me see something real quick. One second. Yeah, I mean, I wouldn't mind that, Sid, in terms of dollar cost. I think that you can average into this. I don't think it's a bad idea. You could put it into DCA. I'm sure there's some other names in the sector of the utilities in which you pretty much want to divide that up to. I think that'll pretty much be pretty much a very good idea. It's just the sectors that you're pretty much looking to dollar cost in towards would be the bigger concern. So make sure the sector that you're looking at right now, in terms of that, would be ideally what you want to look at, in which you're looking at long term. So that's pretty much the bigger thing that I would say about that, Sids, is that you're pretty much just buying one at a time as the market falls. And that's what was pretty much my point, is looking at in terms of the long term trend line supports, looking at the long term trend itself, major support levels. That's when you want to basically dollar cost average into each one of those. For right now, I would say that you kind of look with the stronger sectors that are holding up right now. Maybe some down names. Ideally, is maybe what you want to just kind of gear your attention towards. Look at some of the energy names. That might be another sector in which you kind of want to gear towards. So if I would say where my strength is right now, it would likely be towards more sort of the Dow and the energy sector, believe it or not. All right. And then the utilities would be it with along with that. So that's where I would say is that you kind of want to spread out into the dollar cost, and that would be where you really want to look at. All right. VIX closed red despite this new low of the year. Good bottom sign. Not necessarily. I would not say that. There's times where we've seen where SPY has been green, and the VIX has been green, and that's just not the case in which the market continues to want to say that that's a top necessarily. It's just because of the volatility index. It was just a slow bleed. There was nothing here that gave you like an elevated, um, volatility on this. It was just everyone's was already loaded. The selling pressure was already there. But that literally just does not give you any kind of indication of a bottoming or a top sign. All right. So I wouldn't gauge that towards being a bottom or a top. If you're really looking for any kind of sign in terms of a bottom or a top, then you're likely looking at two things: either a major support level, or you're looking towards a divergence. That's pretty much your two big indicators that you're looking at in terms of trying to identify whether it be a top or a bottom. Is your divergence or a major support level that you're watching? All right. SLB. Let's take a look at this. Industrial. All right, this is a solid name. I like this one. I am on the weekly here, so I do like that. I do see a little bit of a resistance overhead here, a little bit of a supply zone that it looks like you kind of smacked it right now, and you rejected right off of it. So that's something that you're definitely going to want to see it retest. So SOB, you want to see it retest this high 45 up towards 46 half. Ideally, that resistance spot itself dead on is 46.27. That's what you want to see it break out of. Otherwise, if you're looking at support off of this, I'm looking at support sitting right here off of this spot. Your support level that you're watching is 3580 to 3583 is that ideal spot that that cushion spot where you want to see it hold on SLB. If you can hold that cushion spot, then you want to see it break out of that what that resistance is to that 4630, and then you can get continuation back to the upside. So this is one that I actually do like. It's actually broken your defined downtrend. That's actually a solid movement off of this. That's one thing that you definitely wanted to see. So you had the beautiful break of the downtrend. Um, my only concern is here is that off of that cushion spot that I mentioned, if you can't hold that 35 half, then what's going to end up happening is that you're going to retest the downtrend break, which would pretty much potentially bring you down as low as 29 half. And you test the downtrend break, and that would be the ideal spot that I say look to go long on. So 29 half will be the ideal spot for me personally to see if we get a pullback, break that little bit of a cushion of the support level that I have, retest this downtrend break at that 29 half, and that would be the spot that I ideally would say go long on. All right. So I hope that kind of helped you there, Joe. But yeah, beautiful chart, beautiful weekly downtrend break. Look for the retest, and that will be the spot where I would say that you potentially look to go long on it. All right. You know, Scribble, do you have any thoughts on UST depegging today? Honestly, I have not looked at any crypto at all. I'll be honest with you, Patrick. If you really wanted to know anything in specific about crypto, what I would say is that you go down to the crypto chat. The other scenario is that you can message my boy straight. He's the one basically in charge of the crypto lounge there. So message him and he'll be able to give you pretty much insight and he'll be able to give you an update on that. All right. But honestly, I don't want to give you any kind of misleading information because I have not necessarily followed crypto for pretty much, I want to say, since the beginning of the year. I have not looked at it. Just knowing the fact that I had already known that crypto was going to have its downfall on the back end of pretty much, our markets. And I've been too pretty much concentrated on the US markets um, aside from crypto. All right. But I will be looking to get into crypto here. Sometime I want to say by the summer here, as we continue to slow downfall, finding a bottom in the U.S. markets. I think that there's only a matter of time until we find a bottom soon on crypto, and I'm looking to load up on that as well. All right. But hopefully, kind of gave you guys some answers on some of the questions that you had, some charts that you want to look at. I think the biggest thing right now, and I know I've tweeted this out. I think maybe 2 or 3 days right now is that unless you're picking up stuff for the long term right now that you're literally just buying that you're planning to hold for years, long term portfolios, I would say just I caution, and I say that very extremely caution wise, is that if you haven't realized and you haven't paid the consequences of trying to go in heavy in this market, be cautious of how much you're pretty much dumping into this market right now with the amount of volatility that you have. And one of the biggest thing is as well is that don't try to be biased in terms of the market direction. That's one thing that will likely be your probably your biggest downfall right now is that I know there's traders out there that are pretty much they're more bullish than anybody, always trying to find a bottom. And that's not necessarily the case right now. If you're gonna try and find a bottom right now, and especially along these weekly downtrend resistance in which you've been looking for a bottom maybe about 2 3 months ago, and obviously you haven't seen it, then obviously you have to change the way and your perspective of the way you're looking at things, right? But in the meantime right now, I would just caution, you know be mindful of how much money you're dumping into the market right now, especially playing weeklies. versus entering in positions for long term. All right, and that's pretty much what I would say. Jay, where are we buying Square? Actually, that's a good one. Actually, I'm not gonna lie, that was probably a really good one that I have not looked at. Let me take a peep at this. Let's see Square right now. Damn, am I really gonna say that? This thing was its low was $33 before it literally just took lift off. Ouch, that's disgusting. Let's see where do I want to buy this stuff. If I was really gonna say where I was gonna dump my money into this, where I would literally kind of enter with my money, if I'm being honest with you, it will be right around this spot right here. Yeah, honestly, I would look to buy this at 58. 58 would be the spot, Jay, that I think we can likely end up. We can get a starter position at 58. If we hold the 58, then we could pretty much look to re-add once we end up breaking back over 84. That's likely where I would pretty much average up. But that's why I say a starter position. 58 is that spot because if that crap comes down even more, and as you see, you have a solid base down here at 33. I do not want to be a part of that. So that's where I would definitely have a stop loss on it. If I'm entering at this spot at this 58 spot, then my stop loss on no, on shares, and I say shares, will likely be at this 50 spot because if you crack 50, then you're going down to 33. All right. But 58 would be that spot. That's where I would likely look to buy Square right now. Because other than that, though, if you can't hold 50 as a stop loss, then I feel it's coming down to $33. And the other scenario about Square, though, that's kind of more skeptic is that with the whole crypto thing that they have, that they pretty much, a lot of these names have gone into crypto, PayPal, Square. If you see all of them, they're just getting wrecked on the back end of crypto. And that's something I don't like. To be honest with you, I really don't want to be pretty much affiliated with anything with crypto right now. That's just the mindset right now. Not that I want to be biased against crypto, but everything that's related to crypto right now, we already seen what coin is. I mean, that thing has like no floor right now. I know Avery's literally been saying it for probably decades already. Like, there's literally no demand on where coin is going. I think the same thing could be said about Mara. That was one that was pumping with Bitcoin when we were pushing like the 60K mark on Bitcoin. It was just going up, and I know he would. Avery was pointing that out when it was going up. But now I don't even know what that chart looks like right now on Mara. What is this thing at? This thing's out $9, guy. Look at this. From $83 to now $9. Like, that's what's skeptic to me about that. So I mean, names with crypto, I'm a lot more skeptic. I think you look for names that have a lot more fundamentals behind it in terms of not being so associated to like volatility. Um, as it relates to Bitcoin, and that's just pretty much my mindset. But of course, I gave you my level, and this is why obviously, if you guys heard me yesterday, because someone actually had me look at coin yesterday, right? I think I gave you like a level of like 54, 55. I was watching on coin, but this thing has no support. There's literally no support here that says that I want to buy this thing at all. Like, what's stopping this from going down below 50 right now? If we already know that Bitcoin's going to continue to go down right now, with the market, then what's to say that this is not going to go down even further? Why would I want to buy this here? There's just no support level, no major support level that would tell me that I want to buy coin here or even add it to a long term portfolio right now. I literally have zero reasoning behind that. That's where you bought it years ago, sold it at 280, 250, 220. Jay, that was a hell of a snipe that you did off of Square. I like that play a lot. That was a beautiful one. That was a hell of a game changer. I would say that, and this is kind of where I would caution. Like, there's one name that I'm kind of interested in buying. Obviously, I want to see it come back down a little bit more. But the fact that Elon Musk now owns Twitter, this is one that really piques my interest from a long-term perspective, because obviously, Elon's not a dummy to go and buy Twitter and not to make it a money printing machine. So the fact that they could potentially end up increasing revenue. We're gonna see that he's likely gonna end up turning this into like a retail market. More than likely, I think he's gonna have that mindset to really turn it into a retail market. I think this is one that I would want to get behind in terms of long term, because I would not be surprised maybe years from now that this ends up going over $100, which is highly likely for a name like Twitter. So this is one that I really like for long term. The other one that I particularly like was also Starbucks. I'm pretty much a fan of Starbucks here. The level that I was watching on Starbucks that I wanted though was 63. 63 to 64 was the level I was watching on Starbucks. This is another one that I kind of want to own because I don't think Starbucks is going anywhere. Everyone loves Starbucks. It's just that obviously their China exposure is really what's taking the downfall for Starbucks right now. But this is another one that I like. Once inflation kind of calms down, this is one that should end up re- rebounding as well. So that's another name that I pretty much like. Disney, I already gave you my insight on this one. I'll wait for it. Ideally, I want it under $100 here. If I can maybe snipe it, maybe I get a starter position around the 97 mark. We'll see if it holds there or not. But ideally, what I wanted, and maybe I'm getting greedy, but I really wanted $79 on Disney. I don't know if it's going to get that on the back end of this earnings, maybe. Maybe it holds up a lot more than I expect. But $79 was really the spot I wanted on Disney. We'll see if that ends up pretty much materializing. And that'll be one that I want to get into. In terms of tech, AMD is another one that I was looking at. This is one that I pretty much want to be in. Let's see if we get a move down towards 73. 73, 74 will be the spot that I want to go long on Disney. Not on Disney, on AMD. So 73, 74, I'm going to look to see if I potentially look to add AMD to my long-term portfolio. And that'll be another one that I like. So that's kind of just going into pretty much what I want to say is different sectors, right? Starbucks, different sector. Disney, different sector. Tech, AMD. Just looking at different things, right? Picking out different sectors that I want to add and pretty much getting diversifying my portfolio for my long term. All right, and that's ideally what my entire segment was that I pretty much wanted to get towards on my life here today. Was looking at long term charts on a day where market literally just nosedive, just bleeding. That's ideally what you want to look at. The levels that's on the stocks that you want to add to your long term portfolio, and at what level you basically want to add it. All right. But I'll leave it at that. I'll shut my rant up and I'll be quiet. And we'll call it what it is. Let's see what we do tomorrow. My gut feeling right now is that we get a dead cat likely by tomorrow morning, and we continue this downtrend. Watching Apple and Tesla to basically just lead that downfall, and everything else to basically follow suit. And so we'll look to see what the levels are come tomorrow morning, and we'll be able to play off of that, pivot off of that. And then of course we'll see what the cloud alerts are doing, in terms of the ones that are in beta right now, and also we do have the QQQ, the SPY, the NVIDIA. All those are all live. So I would say right now, those of you that are pretty much, you're not experienced with TA, especially in this kind of market environment, bear market, I would say pretty much trust your cloud alerts more so than anything right now. I think that's the best case scenario I can give you is trusting the cloud alerts because although the flow alerts are pretty much bangers, the Nimbus and the unusuals, sometimes your entry point kind of matters on that. And that's why I would say that you more so lean on the cloud alerts because those are very more technical in terms of your entry and your exit points. All right. So I'll leave you guys with that. That'll be my end of my rant going on here for this live. But other than that, appreciate you guys joining in. I'll see you guys on live tomorrow morning. And I'm out. Later, guys.